Disney reporting earnings after the bell, beating expectations. Here's CEO Bob Iger discussing the purchase of Hulu.
We feel great about it because the combination will give us an ability to essentially lower customer acquisition costs, reduce marketing, hopefully reduce churn, and most importantly, create more engagement. And that's great for advertising. As you know, we have advertiser-supported subscriptions for both Disney Plus and Hulu. Actually, it's quite a bargain.
Join us right now at the table, Jessica Reif, Ehrlich of BofA Securities, senior U.S. media and entertainment analyst. Good morning.
Good morning.
Okay, so what do we think? Stock is up. There's also some big cuts involved that are coming along with this. But if you're Nelson Peltz, is this enough for you?
Bob Iger is a leader, and he's done a lot in the relatively short time that he's back. But you can't cut your way to growth. So a lot of what drove the stock, like in the aftermarket, were the cost cuts in operating expenses and in content. But at this point, the focus has to be on growth, and that was the messaging. The narrative is getting better for sure.
So how do you think he gets there? What do you think he really needs to do? We keep hearing about the possibility of an ESPN deal. You now have this Hulu piece that's been figured out to some degree, though it's at a time when advertising, you talked about advertising, is obviously not exactly a very strong place to be. How does that play out?
There's a lot in there. On advertising, the strength in the market is in sports, which obviously ESPN is a very big part of, and in AVOD, which Disney Plus will grow into. So they all will, Max, Netflix, et cetera. So advertising is problematic for traditional television since viewers have gone away. But there are other parts of the business that they're focusing on. Hulu, they'll introduce one app with Disney Plus, which should help. It's sort of like a new bundle.
Right.
And on ESPN, give Bob Iger credit for recognizing the problems and discussing them fairly openly. Disney owns 80% of ESPN, Hearst 20%. Assuming they keep majority control, which is what Bob Iger said, they could bring in one or more equity investors or strategic investors for a 36% stake. We value ESPN anywhere from $24 to $30 billion. And I think best case would be getting some of the sports leagues in, possibly a tech partner like an Amazon or...
Okay, so let's say they do that. Let's say they do that at your valuation. Mm-hmm. Is that already baked into the stock?
No.
No.
It's unclear if a league would actually come in.
Right, but let's say a league came in, or let's say some transaction took place where a third party comes in at the kind of valuation you're talking about for ESPN. What happens to the value of Disney?
I think it actually does help a lot because any partner coming in would strengthen ESPN. And that's what Bob Iger is looking for, is either content or distribution. Like a technology partner could take it global. A sports league could guarantee more content, but maybe more content.
I'm just trying to understand sort of what you think the stock is worth in that kind of... Because it doesn't matter. What I'm saying is it doesn't matter who the third party is. I'm saying if you get that kind of valuation, what is this company?
110.
Is it 110? Is it 120?
Wow.
Isn't that what your price target is?
That's an amazing number.
But
yes.
Is that price target 110 based on that happening?
No, it is not. No, it is not. The stock has been de-risked. I mean, it's really just, all of the negative news is in. And at this point, I think, some of the potentially good news could come. The industry is in a transition. Disney's not immune. But Bob Iger is a tremendous leader.
For how much longer?
A couple of years, maybe.
You think, really?
What do you think about Ike and Nelson?
Hard to know what they want. I don't think...
But if shareholders called you and said, these guys want to get on the board, you would say, that's a good idea, that would be helpful, that would be harmful. What would you tell them?
It's obviously not going to be my decision, but...
No, I know, but people would say, do you think it would be helpful to have some activists on this board? Do you think that's a good idea or a bad idea?
I mean, in general, it's a good idea to have somebody who's really looking to drive the shareholder value. And
can we talk about the strike for a second?
Absolutely.
How big an impact is that going to have? I mean, in terms of when you think, now that this has been said, how quickly can production really start? What does it do to the schedule? come the spring, come summer, come next fall?
Well, content licensing for Disney, for Warner Brothers Discovery, for everybody was down because there was no production for months and months. What's interesting about the strike,
which is going to impact comps for next year.
Well, it will actually be helpful next year as they have content again to sell.
Right.
But what's interesting is that the content spend for the industry overall is coming down, even with higher costs for talent and for labor. Everybody's had a chance to rethink how much they're spending, how much content do they really need. So one of the things Disney said last night is content spending next year will come down to $25 billion from $27. Everybody's decreasing, content. So the mistake by labor was that it gave a pause to everybody, and the spending like drunken sailors is over.
If you could own one of these stocks, which one would you like right now?
At these levels?
At these levels, you could own Warner if you like. You can own Walt Disney. Paramount is available.
Well, she just downgraded it.
I know. I know she did. That's what I'm saying. So
at these levels, Warner Brothers Discovery provides the most upside. We obviously like Disney and Netflix as well.
And what has to happen on the Warner side?
Warner, but they've done an amazing job. They are leveraged to an upturn. Their costs, and they've restructured. Like nobody has taken apart the old-time Warner, as has the current management team. So to the extent that they can grow, whether it's advertising, film, games, which is a new area for them, as they develop IP, their library has not been utilized, unlike every other company in this industry. They've really gone through everyone else, including Disney. It's many remakes.
Right.
Were they just being too cautious in terms of the guidance about the ad market for next year?
They were very open that there's no
Challenges,
visibility.
yeah.
It's very challenging. There's no visibility. The growth, again, is in sports and AVOD. They have that, but there's just no visibility. To the extent that advertising starts to come back, brands need to advertise. They're in a tremendous position to leverage that.